ASX 200 Closing Bell, see April 2026. On Thursday, 2nd April 2026, the S&P ASX 200 index closed at 8,579.50, dropping by 92.30 points or 1.06%. This decline erased early gains and snapped a two-session winning streak. It was a day of dramatic reversals. The market initially hit an intraday peak of 8,823 points, up roughly 0.6% from the previous close, before a rapid midday sell-off wiped out 1.4% from that high in just 90 minutes. Over the last 5 days, the index has managed a net gain of 0.63%, but it remains down 1.55% year-to-date. Despite the recent pressure, looking at the one-year horizon, the index is still roughly 8.48% higher than this time last year. Sentiment soured sharply after U.S. President Trump, in a high-stakes address to the nation, signaled the possibility of further military strikes against Iran. While he suggested the conflict could potentially end within weeks, his hawkish rhetoric about bringing the regime back to the Stone Ages, if a deal wasn't reached, heightened global fears of a prolonged escalation, causing U.S. futures to slump and hitting Australian market confidence. From a technical perspective, the index continues to hold above the key support zone near 8,383.2. Bullish market participants will be closely watching the near-term resistance around 8,140.3. The RSI is currently sitting around 46.32, suggesting a neutral to bearish momentum, as the market remains within the 8,383 to 8,940 range. Sector performance during the session was overwhelmingly bearish, with 9 of the 11 sectors ending lower. Information technology was the weakest, correcting 3.93%. This was followed by materials, which dropped 2.77%, and healthcare down 2.14%. Major miners like BHP and Rio Tinto finished in the red as investors weighed the impact of surging energy costs on global growth. Conversely, energy was a pocket of strength, with Woodside Energy surging 5.1% as global oil prices spiked following the Middle East tensions. Consumer staples also performed well, gaining 1.32% for the session. In corporate highlights, Karoon Energy reported an underlying net profit of $107.5 million for the 2025 financial year, though revenue fell 19% to $628.6 million due to lower realized oil prices. The company continues to return capital through dividends of 3.1 cents and an active share buyback program. Management issued a confident 2026 production guidance of 8.1 to 9.2 million barrels of oil equivalent, with analysts maintaining a buy rating due to their high margin production and low debt profile. Meanwhile, Alcoa hit a 52-week high, surging over 4.6% as aluminum prices spiked following reports of attacks on Middle Eastern production sites. Alcoa is also streamlining its portfolio with a $1 billion asset monetization plan, while renegotiating power contracts for its Portland smelter in Victoria, set to start in July 2026. On the trade front, Australia's trade surplus more than doubled to $5.69 billion in February, crushing market expectations. This was largely driven by a 30% surge in non-monetary gold exports. Agricultural exports also showed resilience, growing nearly 14% to $7.35 billion, led by a significant 26% increase in meat and meat preparations. However, we saw declines in iron ore and LNG shipments, suggesting some softening in underlying demand for bulk industrial commodities. Furthermore, imports fell 3.2% to a 7-month low, reflecting trade uncertainty and softer domestic demand. The Australian dollar also came under pressure, falling below 69 cents as safe haven demand boosted the US dollar. Looking ahead, market participants are shifting focus to U.S. initial jobless claims and services PMI data for deeper insights into labor market trends, employment demand, and overall economic health. If you found this ASX market wrap useful, Please like, subscribe, and turn on notifications for regular updates. Share your watch list in the comments below and let us know which stocks you're tracking. Thank you for watching. Trade responsibly, manage risk carefully, and we'll see you in the next market update.
Disclaimer: the information contained in this publication is general in nature and has been prepared without taking into account your objectives, financial situation, or needs. It is provided by Titan Securities, holder of Australian Financial Services, license number 307040. It is not intended to constitute personal financial advice. Investing and trading involve risk, and past performance is not a reliable indicator of future performance. You should consider your own objectives, financial situation, and needs before acting on any information contained herein. You should also read our financial services guide and, where relevant, the product disclosure statement and target market determination issued by the product provider. These documents are available upon request. Titan Securities accepts no liability for any loss or damage arising from reliance on this information.